Hello and welcome to another episode of A Slice of Health, the Candid Health Chat podcast, where we slice away health truth from health fiction. Join me and my friends as we challenge common health myths via chit chat, powered by several cups of coffee. Don't forget to subscribe and follow us on social media, and do visit us at asliceofhealth.club. Let's get to today's episode. On today's episode, we're joined by accountant, personal finance blogger and speaker, and author Bukiie Smart. Bukiie is an accountant by profession who uses her spare time to enable young people succeed in their financial lives by running the Save, Spend, Invest platform, which aims to empower young millennials to save better, spend wiser, and invest smarter. When she's not crunching numbers at work, writing blog posts, or hosting events on personal finance, she enjoys reading and traveling during her spare time. On today's episode, Bukiie joins us to discuss financial health during the COVID-19 pandemic. Hello champions, welcome back to another episode, and today we're going to be talking about finances, financial health at this time of crisis during COVID-19. Welcome Bukiie.
Hi, thank you for having me.
Thanks for coming on. Tell us a bit about yourself.
Okay, so I am a personal finance blogger and speaker by night, or sort of every day. But my actual day job that I get paid to do is accounting. So I'm an accountant at a professional services company. And that's just one of the things I really enjoy doing, actually, is finances, helping people and businesses to sort of, make sure that they are get into their financial goals. And I think that transferred from work into me then starting Save, Spend, Invest. And then we have a podcast as well. I wrote a little book as well on just getting started with personal finance. And outside of all of that, I like to travel, I like to write, and I've really gotten into sort of reading lots of books over the last couple of years. So yeah, that's
that is awesome. That is great. It sounds like you've got quite a nice full, active, varied life.
Yeah.
And did you have any travel plans this year that have been interrupted by COVID?
Yeah, I was going to do a 3-week Europe trip actually, just after this Easter up until beginning of May. So that just went out the window. But the good thing was I was able to get a lot of money back because I had bought everything as refundable, just sort of as things were, starting to progress. So I just thought, sorry. So I managed to get basically all my money back. So that was good. But
yeah, I think COVID's definitely affected quite a lot of people, especially in terms of their finances. And obviously that's what we're going to be talking about today. But I was just going to ask you, in terms of your work in personal finance, what problems have you seen or encountered so far with the current crisis?
So you mean like me personally, like, or the questions that people have asked me?
Yeah, people have asked you, or things that you've had to deal with on behalf of other people.
Yeah, I think the main thing is people sort of saying like, okay, two parts to it really. People who have lost their job and they're like, okay, what do I do next? Where do I go from now? People who didn't have emergency funds, or they don't know if to start dipping into their savings, even if they didn't call it an emergency fund. And on the other side of that, there are people who still have their jobs, but they're like, okay, what do I need to be doing now? How do I make sure that I actually come out of this much stronger? Because in as much as we'll get into this, but in as much as a lot of us are saying like, oh, we have tons of money now to save from all the travel, socials, etc. It's quite easy to spend this on other things and not realizing, because you just think like, oh, I'm going to spend on Amazon and go do some shopping and all these things, and you actually have spent the same amount of money that you would in a regular month. But yeah, those two are the two sides of the coin, I'd say.
Yeah, definitely. And I can definitely attest to that fact personally as well, in terms of spending, because a lot of my spending is on travel and seeing people. And because I've not been spending that money, I bought myself a new coffee machine. And then I've not had a TV in my flat for 10 years. And I was thinking, actually, this might be the time to buy a television. But I've actually stopped myself from doing it. So I'm actually that's my good thing that I've done in COVID, not buy a TV. But I think quite a lot of people have actually been spending quite a bit of money because, you're not really doing anything. So
and they're right as well, right? Like People trying to sell you from fitness to equipment to so many things that you should be doing, seminars, all of that.
Yeah, online classes, workshops.
Yeah. So still money going out.
It is. And the government came out with this COVID-19 job retention scheme for people. What exactly is that?
So that job retention scheme, it's basically to provide support to employers so that, you know, they can still keep their employees, because for a lot of companies, especially sort of small, medium companies, startups, etc., the majority of their cost is actually wages and salaries. And so most of them came out to say, this COVID-19 is going to cause a financial stress for them. A lot of people were already making decisions to lay off people quite very early on, actually, because once you sort of forecast even 3 to 6 months, is still a hefty cost that a lot of companies couldn't bear. Otherwise, they were going to have to, go bankrupt or actually close shop. And so the government came up with this job retention scheme for coronavirus to basically provide support to employers, which means that they can keep their employees on, but then the government would actually pay them 80% of wages for those employees that are being kept on, up to £2,500, which is actually quite decent. And then it's up to the employers if they want to pay the remaining 20%, or if they can't actually afford it, then just say we can cover up to 80% of your current salary.
Okay. I suppose that's quite good of the government to do that. And so that 80%, is that what a furlough is? Because it's a word that I'd never really heard before. Apparently it's common in the US, but it's not something that we're used to here.
Yeah, I think
it is a furlough.
That is correct. That is the government scheme is to place those workers in furlough, and when you're in that period, you actually can't do any work for your employer. So it's almost like taking an absence leave but still getting paid for it. And at that point, it's basically that the employer doesn't have any work for you to do, or they just can't afford for you to be at work. So sometimes, employers would do that as a short-term thing so they can manage cash flow and then bring those workers back when everything is back in balance. But now, seeing that COVID-19 is such a short to medium term impact, a lot of workers are just being placed on that without employers saying, oh, at the end of it we'll bring you back. I think they'll sort of have to reassess at that point.
And are these employers who have then put someone on a furlough, does that then is it within their power to then decide who they take back and who they don't take back once everything settles down?
Yeah, so it's completely up to the employers. Some employers actually would not even decide to go on that scheme for reasons of their own, whether that is that because with all these grants, there's always something that they might have to pay back, or there might be clauses and things like that that may actually mean that they are not getting the full grants, and so those extra costs can actually start to add up. So it's completely up to the employer to decide which employees they want to actually put on furlough, if they can put them on, and then which ones that they want to eventually bring back.
Okay. And I can imagine that time, obviously we're looking at, they initially said 12 weeks of social isolation, but it's looking like it might actually go on a bit longer than that. Obviously that's quite a lot of time to be at home, especially if you were working full time previously, or you're working in hospitality, which is very demanding job, but now you're not able to work. Those kind of people who like keeping busy, are they able to then do other work for another employer while furloughed to their previous employer?
I think there's some flexibility around it. So they've removed a couple of restrictions. I think it depends on what sorts of contracts you have and also what your employer would have. So for example, if you're put on a furlough with one employer, they likely don't want you working on a similar, like a competitor.
Okay.
So you're like maybe working in social media, which might be a little bit more flexible. That might be allowed. They might be like, okay, you can go work for another company. But then if you're in like financial services, for example, or a different industry where they're like, this information that you have here is probably quite useful, then in that case they wouldn't want you working. So I think the government again has left it to the employers to say, you decide, but the government themselves, they've taken away a lot of the restrictions, not allowing you to do 2 jobs at one time.
Okay. And what about those who have lost their jobs? So let's say, because obviously it's all the employer's rights, isn't it, who they furlough and who they lay off. What opportunities do we then have for income for those who've been laid off, not obviously of no fault of their own, but because of COVID?
I think it's difficult because most people just have a full-time job, really. Even if they have like a passion or a hobby that they do on the side, most people actually don't have other things, other forms of income coming in, especially ones that are quite tangible, quantifiable. So I think at that point it gets difficult in terms of just saying like, okay, where are you going to get money from? I think what a lot of people are trying to do is see how they can still make money somehow. So actually leveraging those passions or hobbies that they've just been having on the side, and actually saying, okay, can I do an ebook and sell it? Can I host a webinar, get people to pay £10? Can I do a live? You hear so many things. I think a lot of people have started getting really creative in actually how they can make money. And that is definitely encouraged. Like, you should sit down and actually think about your skills and the sort of experience that you have, and see, okay, who is paying right now? Because in as much as there's so much money going out, and there's like freezes on like wages and salaries, I think there's still a lot of money coming in for people who know where to charge people, or where the money is being spent at the moment. So online entertainment, fitness, these are things that people want to do and are willing to pay for, because they even have the extra money to pay for it now. So people just need to sort of start to pivot their mindsets and actually think like, okay, where can I make money from at the moment with my skills?
And what about universal credit? Is that something that's still going on, and are people then now applying more for it?
So universal credit is still available. There's still like DWP, Department of Works and Pensions. A lot of them are still open. I think that they are sort of rationing it out again, because they're expecting, and there are a lot of people who are going to claim it, and they're sort of doing it on a case-by-case basis. And I think the plan is like, if you still can get some income, or I've said to some people, go back to your employers, people who have actually been laid off, like, go back to your employers and ask them to follow you, because then it might be some cost to them, but the majority of it is not anyway, and it's a government supported grant. And so they have said, okay, let me do that. And some employers have actually said, yeah, sure, that makes sense. While others have gone, we can't do that for whatever reason. So I think that there is still universal credits available, but people, it just might not be accessible to just anyone and everyone
at any point. And what about talking about pensions and things as well, and normal outgoings, because we all have these outgoings, and a lot of us live either above our means or just right on the border, like just an extra £10, just an extra, a t-shirt from Primark, just enough. And so our mortgages go out, or rent, car payments, all those things. How are people then? What recommendations would you give to people? Are the banks, being merciful with credit card debts, paying back on time, your credit history, all those things that you've been trying to build over such a long time? What is happening with those?
So I think earlier in March, when things really started to ramp down and cases started to spread really quickly, a lot of banks started coming out to say they were going to do 3 months where they wouldn't charge you interest on your either credit card or your overdraft. But I think you needed to call them. I don't know if they've changed that right now, but I still think that you need to call them, because they don't just want to offer that to people who can actually still afford it, right? I think they're sort of thinking about people who are like, I have no more income, but I still have bills to pay, I still have credit cards, etc., mortgage, rents, all of that. And they're like, okay, call us and let us know what your situation is, and let us then tell you what is available. And so of what is available, they're giving like 3 months breaks for people who have mortgages or rentals. Some landlords have actually said that they would give a 3 months rental break, because then they'll be able to get some support from the government, even though the government haven't said anything. But I think that they're foreseeing that the government will have to help them, because they can't also not give and then not get anything in return. So some landlords are offering that, but mortgages, the government has definitely said that to financial lenders, that they should be willing to give a 3 months break. And that doesn't mean that those payments would they would stop for 3 months, but it would just be added back to the end of your repayment term. So say you had you were coming up to, you had a 25-year mortgage and you were coming up to the 25th year, they'll add that extra 3 months at the end, just so, you know, everything is fair. And then in terms of bills and utilities, things like that, I think, again, it's just calling up the providers and just saying, this has affected me. I think the word on the streets is that everyone or every provider should be willing to be flexible at this point. So everything from like car payments, insurance, gyms, you know, water, electricity, all of that, like whatever is coming out of your direct debit, you just need to pick up the phone pretty early actually, and then just call them and say, yeah, can this be put on pause? Or, you know, what sort of flexibility can you give me? Some might say, okay, we might not be able to stop it for 3 months, but can you pay half every month? You know, so it's just sort of finding out what is available. And again, I think they're doing this on a case-by-case basis, as opposed to just saying like, oh yeah, everyone is going to be put on, you know, everyone's going to stop their car payment for 3 months.
Yeah, I suppose that's good in terms of them being merciful, because, you know, when it comes to finances, everyone believes that the taxman is ruthless and so are the banks. So the fact that there appears to be some mercy is quite nice. But going back to the furlough, that 2,500, is that tax free, or is the HMRC going to then take tax out of that 2,500?
So unfortunately, they've it will still be like you're getting a salary and you still do have to pay tax on it, which some people are like, then what's the point? But I think their point is just still getting back something. Obviously, they're still sort of trying to work out the details, and maybe at some point they'll see if tax needs to not be paid, or maybe there's a way for you to be able to claim that tax back or something of the sort. But I think at the moment they're treating it like a normal salary, where you would get, you know, your tax and your NI taken out of that. But I think for less than 2,500, it's quite low anyway. You should probably be on the basic band rates, which is probably the lowest amount of tax. Yeah, so not great, but, you know, it's still some.
Because I'm just thinking that obviously as that goes lower as well, with 20% obviously coming out, by the time, if they're taking out all the normal things, so tax or student loans or whatever it was that they were taking out before, once that money actually comes in, it might actually be less than minimum wage for some people, depending on what it is. And so for them, you know, it'll be quite a bit of a shock dealing with that.
Yeah, which is, I guess, you know, why I said some employers are like, no, they don't want to still put employees on the scheme, because there is still a cost to them. And again, you know, it would add up, even if it's tiny, it would start adding up if they just put all of their employees on that, because they still have that cost to pay.
Yeah. And so at this time, how do we save? Because obviously financial health is still really important. The impact of finances on a lot of people's mental health currently is, you know, it's through the roof. But how do we, so people who are still working or are furloughed and have a decent cushion to lean on, or have, you know, taken up Instagram Live or YouTube and money's coming in somehow, how should we save at this time?
I think the most important thing is to just like sit down and say, okay, I'm not doing, you know, I don't have my usual expenses. Your biggest expense at the moment should be either like your mortgage or your rent. And again, even with bills, you can still sort of negotiate that, but you just need to sort of reassess and say, okay, where am I right now? What is available to me? And then say, for example, if you have a mortgage but you've been able to get those 3 months payments, okay, great, you can save that amount of money. You know, all your socials and things you would normally pay for, you can save that. So just actually sit down, look through your incomings and outgoings, and just say, okay, out of, you know, I'm not doing anything but sitting down at home, and this is what I normally either put aside for savings, and this is how much more I can contribute. But it's important that we don't just have a figure in our head and be like, oh, of course I'm not going out and I'm not spending any money, so I'm saving, but actually sitting down to have that amount and say, okay, out of this, I want to be able to save this amount of money because, you know, I have this mortgage 3 months allowance. I've cancelled most or all of my bills, you know, I've removed all my subscriptions, etc., and just be very specific. And I also think that it's important for people to save towards an emergency fund, because, you know, you might have a job today, but we don't know how long this is going to continue. And so even people that think that they might have job security, I mean, what we'll find out in these times is that absolutely no one has job security, right? Because every industry that I can think of is impacted one way or the other. If it's not directly the business, it's the employees who are being let go of. So I think that everybody just needs to sort of plan for the next 6 months and actually say, okay, this is how much I want to have saved in the next 6 months. Yeah. How can I work backwards and make sure I'm hitting that
target? And so obviously emergency funds are things that a lot of people talk about. Have your emergency funds separate from your savings account, and but this is not an emergency that we normally talk about when we talk about emergency funds. I mean, emergency funds are normally like, oh, you need a new tire, or your engine's gone, you need a new freezer. Not the world is on standstill because of coronavirus. So the previous plans and the previous ideas that we had about emergency funds, whether it was, because a lot of people would normally use like, okay, yeah, have 1K or 2K in your emergency fund. Does that still apply now in this emergency?
What, as far as like, is it an emergency? Should you be going into those funds?
Yeah, and what happens once you've used it up? Because if it was only 1,000 for a family of 4, and there's no money coming in now, what next?
Yeah, I mean, for sure, if you still have some income that you can plan for, you should definitely start categorizing a lot of your funds as emergency funds, because we are basically in a state of emergency, even as far as like nothing is normal, right? Even grocery shopping is not normal because you're not spending the same amount of money, because you're trying to think like, they might not be passing next week, so let me buy some this week. It's just very strange. So you should constantly be thinking, I need to put as much money as I can away. If you have no job and you're running out of an emergency fund, or you have run out of emergency fund, you need to then activate your next emergency fund, which is again what I said earlier about trying to get something in the door, trying to leverage your skills, even if that takes a bit of time. I think you sitting down to have a plan and say, oh look, I have a blog, and I get quite, I have X amounts of subscribers, maybe 500 subscribers. If I even got 50 of them to pay me £10 each month or £100, again, a lot of people have cash sat down. So you need to switch from consumer mindset to contributor, right? Let somebody else be a consumer. Let them buy your products or the service that you're selling. But that's where you need to go to and start thinking about, how can I make money some way? Otherwise, really, I think it will just come down to seeing what support is out there. So for some people who are like self-employed, again, the government has some grants that are going towards that. If for some reason you don't qualify for that grant, there's still so many things. I think the Prince's Trust as well is coming, has said that they're going to put out a relief as well for people who are self-employed, but they don't have a limited company, or they haven't been working as self-employed for up to a year, things like that. So there's a lot of things going on that we just need to sort of assess our situations and say, okay, where am I right now? What is available to me, either in a job? Can I go back to my employer and actually ask them, can you please put me on furlough, even if it's only for the next 3 months, even if it's only for 2 months? And that way you can plan, okay, I have this amount of money coming in. Or you can leverage your skills and say, okay, is there anyone within my audience that would be willing to pay for a skill that I have based on my experience, or based on this passion or hobby that I've been running for a number of years, and then going as well to government, what grants or reliefs have people put out there, have the government put out there, have trusts and etc put out there, that is available for me. And then I think finally you may have to go to parents or friends and just be vulnerable. And the truth is, again, some people have more to give, and it might not even be them completely covering your salary. You probably can't ask that of one person, but if you get a couple of really good friends that you trust, and they just know your situation, and you're able to sort of work a plan and say, okay, everyone, if you can please pitch in £50. If you get 10 friends or family members to pitch in £50, that's already £500. So just seeing sitting down and actually doing the math of what you need and what is available to you.
Yeah, that's really good. I suppose just taking stock of what you've got and just being honest with yourself as well.
Yeah.
And is this a good time to invest? Is it wise to invest? Is it foolish to invest? Is it foolish not to invest? What should we do now? What do we do? Because even someone was saying, oh yeah, if you always invest in food and Nestle and stuff like that, you'd probably always be okay because people are always going to eat. But
it depends. I think these are really interesting times to be doing anything with money. Like, it's not just as easy as saying like, oh yes, everybody should be investing now because all the company stocks are like really cheap, and all of that. I think the sad truth is that a lot of companies are going to fold from this, because they just could not afford it, and because they their finances weren't in great shape. So a lot of the big companies that we actually look at and say like, of course they'll be here in the next 5 years, they actually might not be if they cannot actually survive COVID-19. Even with like government support, there's still a lot of expenses. And so I always say to people, like, you shouldn't even think about investing if you don't have any money coming in, or you don't have like a good enough emergency fund, such that, again, like I mentioned with job security, you might have a job this month, next month your employer might reassess and be like, we actually can't afford you anymore. So you need to think about that and have that amount of money saved up as an emergency fund. And at this point, I don't even know how many months of an emergency fund you should have, just because we don't know how long this will go on for. So normally we'd say like 3 to 6 months, but again, 3 to 6 months, we might still be here. We don't know. And you want to be prepared for the worst case scenario. So if this lasts up until the end of the year, you want to be fine, with or without a job. If you've sort of done all of that and you're like, yes, I've been in my bag for the last couple of years, I've been putting my head down, I've actually saved loads of money. I know some people are actually also switching strategies. So I know a girl who was previously saving for buying a property later this year, and she had hit her deposit amount, I think in January. And she just had like fees and other like furniture that she was starting to save up for, but she got let go of, and immediately she had to go, I actually don't have an emergency fund because I've been busy saving for my deposit. So now half of that deposit she's had to sort of say, this is going to be my emergency fund for the next 6 months, whilst also still planning to, okay, where else can I get income from? So a lot of people's plans will switch like that. If you wanted to buy a new car or, big capital item, you can switch that amount of money. But then if you do actually want to invest, you need to be thinking long term and think, do I really think this company is going to be here in the next 5 to 10 years, right? And it's not enough to just say like, oh, they're large or they've been here for the last 5 or 10 years. Because if we take, for example, Amazon has been here for the last 2 decades, right? And we think like, oh my God, of course they're going to be here for the next 10 years. But it's like, is it of course though? Because they are not, I don't think they're turning a profit yet. They have large overheads and logistics expenses. And to be honest, if they're not able to get enough revenue to take out those expenses, they can get folded quite quickly actually, because they would have insurmountable debt that they can't pay. And Amazon owes a lot of money. So it's not like you can't just think like, oh, I'm going to invest in Amazon because they'll be here in another 10 years. We don't know that. You have to really be careful about where you're putting your money, because the worst thing that can happen is you saying like, this company is great, they've been here, they opened last 5 years, I think they're doing well, they're branded everywhere, and I'm just going to put lots of my money in there. And then even if they survive COVID-19, they might not even be here for another year because of the impact of COVID-19. So they might just be able to survive, at the very end of COVID-19, but 6 months, 12 months, they might actually end up shutting down. And then, what happens to your money at that point? So it is quite scary. I think people just need to be very careful, do lots of research, do lots of like due diligence, make sure that you're speaking to financial advisors, make sure that you're calling up whatever investment platform that you're thinking about and just saying like, hey, this is what I want to do in a best case scenario, in a worst case scenario, can you talk me through my options? Yeah.
Yeah. And in terms of things like financial planning for the future, so you'd said, that having an emergency fund is something that is always recommended 3 to 6 months, in advance. How do we, in non-COVID times?
Yeah.
Because this is like, the Surgeon General of the US described it to Pearl Harbor and 9/11 times, and I don't necessarily agree that it's similar to Pearl Harbor or 9/11, but it definitely feels like sort of wartime setting. But those are not the things that we really plan for. We don't sort of sit down and say, okay, so if there's a pandemic and all of that happens, what am I mean, some people do because they watch too many conspiracy movies, but most people don't. So how do we plan properly? So once all of this is settled down, how do we then look at our finances and say, basically what I'm asking is there a good percentage formula that we should look at in terms of how much we're putting away, how much we're saving, what goes into investing, what goes into an emergency fund, and how can we actually live within our means so that when things do happen, we have a nice safety cushion before we have to make significant changes?
Yeah, that's a really good question. And I think at the end of this, everyone will be reassessing their finances.
Mm-hmm.
I think the good thing about this is it gives everyone a chance to actually see where all their money goes to, especially people that always go, I'm broke all the time. I have no money. Oh, it's like, are you really broke? Because this is going to show you exactly what you spend money on. This is when you realize like, oh, I thought I was spending £100 each in a month, but no, it's more like 400, so then you're seeing the savings and you're like, oh, I'm saving a lot more money than I thought, but that's because you're not spending. And so I think at the end of this, when we're really sitting down to reassess, we have what is important to us in very, very clear focus and actually seeing like, am I happy with my spending choices? I doubt that a lot of us are going to come out of this and just jump back into life like nothing's happened. I think a lot of us are going to start shifting our mind as to where we actually spend our money, especially people who have managed to actually save a lot during the period is going to be like, oh, now I have this amount of savings that I've never had before. What do I want to do with it? What are my goals now? So that might be the time when someone might go, oh, I never thought I could save for this deposit in less than 5 years, but it's more looking like a year and a half, maybe 2 years. And then what you want to do is that, okay, your mindset is, I'm going to buy a house in 2 years. What do I need to do? How can I maintain this amount of savings? We're going to find out a lot of people are cutting down things that they don't think is important. A lot of people would, all the subscriptions. Oh my goodness. People have like 150 to 200 pounds worth of subscriptions. It's insane, how much we actually spend. And I think that, again, when we come out, we're just going to be like, do I need all these things, especially things that are recurring, that are like 5, 6, 7 pounds that we don't realize that we pay for because we don't look through our statements, in nitty gritty. We're going to be like, oh, when now that you're not spending anything, when an alert is going out, you're going to notice it more than before when everything was sort of blurred into the lines. And so you're going to come out of this thinking like, okay, this is how much I plan to be spending on subscriptions. This is how much I plan to be spending on groceries. This is how much I'm saving, long term. And then, if people who didn't have, again, access to certain things that they wanted. So if traveling was the goal of yours and you always felt like, oh, I can never save enough to travel. Well, guess what? Now you can, because you reassessed your finances and you've realized like, oh, maybe I shouldn't be spending every Saturday brunching or every Saturday at Nando's. You could actually save that money and be like, oh, I've actually put that money aside. Now I can afford to travel. But yeah, I think it will just be reassessing what's important and then saying, okay, how do I maintain the good financial habits going forward? And then, putting saving 20%, maybe investing 10%, and then even with your 60 or 70% that you're spending, intentionally spending so that you're creating a life that you want to be living, not just existing.
Yeah, and that is really important in terms of just being able to actually look at what you're spending your money on. Because when you were just saying it now as well, when you said that you think that you're spending £100 eating out, but you're actually spending 400, I just realized, I was like, I've not actually had sushi in a month.
Yeah.
And I was like, oh, that's sweet. Yeah, I've not had sushi. I've not gone to Wagamama, and those are things that I don't even count them as eating out.
Yeah.
I'd normally just be like, oh yeah, no, that's just standard. And when you then add these things up, you then like, actually, these are not necessary in terms, and especially when
you can't have them outside of, you know, COVID-19. It's just like, do you need to be having sushi 3-4 times a week now?
That's it, isn't it? How frequently do you need to have these things? And who should we talk to about our finances? So, because a lot of people go online and then they become more confused. But who would you recommend that would give us a good basic understanding for the, you know, freshman in terms of money understanding?
Yeah, I think it depends on what you need. So if you are just looking for someone to sort of sit down with you and like review your budget and, you know, maybe even point out some areas they think you can cut, I think you can, you know, speak to someone that you trust, as like a personal finance advisor or a personal finance blogger, or just someone who is credible enough to say, okay, they know their stuff and I'm going to trust them. Because in the past I've had people, you know, share their bank statements with me, but then the process to get them to do that was so long just for them to feel comfortable. And, you know, you're in someone's business, and that can be very uncomfortable for people, especially people who don't want you to actually know what they're spending on.
It's exposing though, because I'm even thinking about it. I don't want to.
Yeah.
I mean, they can see last month's, but I don't want them to see last year's. Yeah, it's just, yeah.
Exactly. Or it might not even be that. It might just be, okay, this is my budget for the next 3 to 6 months. You know, can you have a look at this and, you know, tell me if this is all right? Do you think I'm saving enough? Is there anywhere I can cut back on maybe? Or even I've actually, I reviewed someone's one and she was saving like 60%, and she was like, I'm just going to sit at home and do nothing, because she lived with her parents, so she didn't have rent or mortgage. And I was like, that makes no sense, because you will be miserable, you will probably be depressed, you have anxiety and all these things. And I was like, okay, if you really want to be aggressive with your savings, save 45%. But then I think it's important to do, you know, spend money on the things that you enjoy, you like. So I was like, you like traveling, you're not going to travel for 12 months because you're saving aggressively. Like, you're going to actually end up being worse off at the end of the day. So, you know, you can do that as well. You can, you know, when it comes to investing, you can also like speak to, like I mentioned earlier, whichever investment platform that you're thinking about getting on, just call them and just be like, hi, I'm thinking of, you know, joining this investment platform. I have a couple of questions. And they are really, really on the ball, because they're trying to get you to join them.
Yeah.
So, you know, they're giving you their undivided attention. They're answering all your questions. They're pointing you out to resources where, you know, you can get guidance from that would actually help you. And then as a last resort, I think you can even call your bank really and just say, okay, this is my situation. I've got these many direct debits going out. I need to make them stop. How do I do that?
Yeah.
You know?
Yeah.
And I've been fortunate actually to get quite a few good bankers who, they're just really good to talk to, because they actually understand how people end up in debt or in credit card bills, and they can point out, you know, really quickly things for you to do to make sure that you don't end up in a rut, basically. So yeah,
that's great. And you mentioned the big bad B word, which is budget. What apps would you recommend that we use for, you know, for budgeting? Especially, you know, a lot of people don't like spreadsheets, they don't like writing things down so much, but when it's on an app, or, you know, it's flashing red, or they can see that they're going past it, or it's linked into their bank apps as well, sometimes that might help. So which ones do you find are quite good?
So, okay, I'll start from actual budgeting apps. So there's 2 that are really good. One is called Yolts, and the other is called Clio. And those 2 are really good because they actually look through your bank, and they put things into the different expense categories. So at the end of the month, I think Yolt gives you a spending report, whereas Clio tells you if you've been able to save or if you've been able to hit those goals that you want. So those 2 are really, really good in terms of just seeing things, and you can obviously go in and say, okay, this is what I'm working towards in terms of like goals, or okay, I don't want to spend above this amount of money on coffee, for example. And then when it comes to banks, a lot of the new to like challenge your digital banks. So Monzo, Starling, Revolut, they're great as well for budgeting. So with Monzo, for example, I use Monzo. I would go in and put the amount of money that I want to spend in each category, and then whenever I'm getting close to it. So if I say eating out, I've only put like £150, and 2 weeks in, I'm already 140. You know, it would start to tell me like, oh, you're close to your limit.
Monzo's really annoying with that.
Yeah. I mean, it's annoying, but it also makes you, you know, reassess
aware.
Because it's like, really, like, how have I spent, or like, you know, what am I spending on? And again, because we're tapping and we're so used to not being like conscious of our spending, you know, it does take an application notification for you to realize, like, you're telling, like, I'm 2 weeks into the month and I'm nearly half of my butt, like how, like, what did I spend on? And you can start to, you know, pinpoint like, oh, I didn't plan this person's leaving drinks, or oh, I went for a bridal shower that wasn't in the budget. You know, all these things that come up, and then that can help you plan better for the next month. Maybe then you have a 10% buffer, so that if anything comes up, you know, it's covered because I've put a little 10% away. But those sorts of banks as well are really, really good with, you know, the user interface and just helping you sort out the different categories from personal care to, you know, transport, etc. Because most of us are not going to be going anywhere apart from to our fridge and back. It would probably be just food. That would be the only category.
But those trips to the fridge are something else. They're an actual problem. They really are an actual problem. It's because that's going to be a thing after COVID. It's like, where did my waste go? Like,
I mean, on the flip side, though, lots of people are getting into like home workout. I bought a couple of home workout things.
That's good.
And thought like, okay, I'll be disciplined, but it's a lot harder to get into than I thought. So
I think you definitely need an accountability partner with those kind of things, especially if you live alone and you're doing it by yourself and you've not planned to do it with anybody. It's definitely
sure.
It's definitely
Accountability is key in everything, really. Even with like finances, you telling someone that, you know, you have this savings goal, like there's almost nothing like it, because every time that you're not hitting it either monthly, or every time, you know, Monzo is telling you you've gone above your budget and you're still spending money, you're thinking like, at the end of the month I have someone to report myself
to. Especially if you're showing them, you know, your statement, and they can see exactly what you spent it on. When someone else is asking you, was it absolutely necessary to have Nando's 2 weeks in a row by yourself at home? I think it humbles you. Guys, I'm talking about myself here. I'm not shaming anybody. I'm shaming myself. But yeah, I think it really does. And I think these are definitely times to be able to then reassess what we're doing with our money, and then come out on the other side with good financial health. Because obviously, money is also one of the main reasons relationships break down as well. And actually talking about that in terms of marriages, has the government done anything for couples at this time? You know, because normally you can have a partner with a tax. There's something different with the taxes, isn't it, if you have a partner that's not working or something?
I think it's how they're able to split the money that they're getting from the partner who's not working. Right. But the government actually hasn't said anything with regards to, you know, couples themselves. They're still dealing with it on a case-by-case individual basis. But I think as time goes on, because this all really unfolded within less than a month, to be honest. I think they're very overwhelmed with actually how quickly things are moving and the actual financial impact, not just on the economy, because that can be like, oh yeah, the economy is down, but on individuals, you know, people in homes are really going to feel it the most. So they need to come up with a plan to make sure that basically they can turn around the economy again and, you know, have people living quite financially good lives.
All this money that they're giving everybody, who's gonna pay off? I don't know if you've seen the meme, your children and their children for 1,000 generations. Is that what it is, basically?
You know what? I think so. I think no one has actually stopped to consider, like, how are we getting all this money from a government that says there's no money for NHS, there's no money for this, there's no money for startups, there's no money for entrepreneurs and small businesses. How are we funding this? I think we might not realize it, but things are going to get expensive very quickly. I can already imagine, it would be little things. It would be like, oh, an increase in, transport by 10%, an increase in mortgages, in lending fees, whatever they need to do, they're going to have to get the money back. And ultimately, it will be taxpayers that would pay for it, right? So that's really where it's going to come from. And it's like you rightly said, that means that, your family or your children and your children, like, this is going to be a long time, because they're talking in billions, right? With the amounts of people that have lost their job, the amounts of companies that might not be able to survive this, they're going to lose billions. And they have to pump that back into those people somehow. So, it's going to be like a circle, just one funding source moving to the next funding source, but ultimately some people will be getting, some people will be the ones paying for it. But it would balance itself out. But I do think that things might get expensive from next year.
Wow. Okay. That's a somber thought. But let's live on a happy note. So give us a championship point that is a bit more upbeat than thinking about all the taxes we're going to be paying for the next, I guess that's my lifetime. That's it, isn't it? But yeah.
Yeah, I think the summary is that, there's no need to be anxious. There's no need to fear. We are living in uncertain times. Everyone is going through it, even the best of people, even people that have their jobs. Everyone is still feeling this in some way and somehow. You just need to take control of, your health, your finances, your well-being, and do what is right for you, and really sit down and count the cost, and, look for more ways to diversify your income. Look for ways to cut down. I always tell people, if you have no savings, no emergency funds, and no job, every subscription needs to go. There's no Amazon, Netflix, Spotify, Apple Music. Everything needs to go. You need to start, getting your friends' passwords. I'm sorry to say, but you need to start asking people for their Netflix passwords and their Spotify accounts, because you just cannot afford it right now. But it's just about assessing where you are, and then knowing that this too will pass and you will come out at the end of it. I mean, God willing, hopefully sooner rather than later. But until then, you just have to hang really tight with your cash and, be very conscious of what you're spending on. Don't go around shopping. Don't go spending £400 on, groceries and eating out, because cooking is long to do every day. But you can't then go, I'm not cooking for the next 2 weeks. I'm just going to eat out for the next 2 weeks, because then you wouldn't really come out of this better than you went in with it. So yeah, just, all will be well. That's what I want to say. All definitely will be well. So don't worry too much.
Okay, that's awesome. All will be well. This too shall pass. Thank you so much, Bukiie, for coming on today's episode.
Thank you so much for having me. This is good.
Thank you for joining us on today's episode. Do share this podcast with 2 people who have not heard about us before. Remember that this podcast in no way replaces advice from your own doctor or physician. Do subscribe and follow us on social media. Leave us a review on iTunes so that others can access the amazing content. And do join the club at asliceofhealth.club and drop us some suggestions or questions that you might have. Don't forget to be a health champion wherever you go by separating health fact from health fiction.